So the question is, where are we going with this? Because once fire is lit, there is no coming back. And right now, it's a very precarious situation. What that translates to is continued higher metal prices, regardless of if any additional worsening geopolitics come to fruition.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. John Lee joins us today. John is the chairman of Silver Elephant Mining. He's also a chartered financial analyst, CFA, boasting 25 years in the silver market, 20 years in the mining sector, and has raised over $120 million for resource companies. And we're delighted to have John join us here today. It's time to saddle up and silver up for John Lee. John, welcome back to SBTV. How are you doing?
Doing fine, Patrick. Thanks for the invite and good to see you.
Good to see you too. Glad to have you on. Last time, my colleague Vince Lay spoke with you, and I'm happy to have a chance to speak with you this time around. I see reports, a lot of them saying silver is in a deficit, demand outpacing supply, not enough exploration going on. Coming from you in the mining space, what is your take on these reports?
Yeah, Patrick, I've been in the mining industry and metals and mining industry for over 20 years. First 10 years as a retail investor, credited having retired from the Silicon Valley in early 2000. And the latter 10 years, I was the chairman and founder of Silver Elephant, which focuses on mining and exploration of silver for the last 15 years. So I've befriended and done a lot of research with David Morgan, Ted Butler, and Gata, Bill Murphy, and I read everything that I could get my hands on about silver in the last 20 years. So I do have a bit of background in silver, particularly from both sides of the aisle, right? From investors and also as executive from the mining industry. I don't read a lot of I don't read a lot of I don't read a lot of reports now because I've done that before and it didn't really get me much anywhere. And the likes of Silver Institute and various brokers never call the silver price right. They can call the timing right or they can call the price target right, but they can never call both correctly. There's also the adage that the street can stay irrational longer than you can stay solvent because gold and silver, I believe, are very, very heavily managed. There's a lot of research done by GATA and James Turk and John Rubino, whom again, James Turk is my mentor. The fundamentals for gold to go to 100, 200, $300 today is not much different from it was 10 or 20 or 30 years ago because eventually the dollar is a abstract construct and it entirely rests on the faith of the public to use a fiat US dollars, and all the fiats has never survived. I don't think the dollar is going to be an exception. So rather, I do is follow. I don't know if you're familiar with Aiden Sisters. They used to be very prominent newsletters back in the early 2000s. That you got to marry the technical trends with the fundamentals because the technical trends is a collection of the mass crowd psychology and its collective conscious and collective decision making that's reflected in the price. So it's not just a one sort of sliced view into the world, the realm of silver, but rather it's a collective conscious that determine the price of silver. So from that regard, I'm very, very bullish of silver because it tracks close to gold. And gold has done better than silver by taking out the all perennial $2,000 critical resistance. It now has surpassed that. I don't believe that gold is going to ever go back to 2,000, not even maybe 2,200. So that will lay a very strong foundation for silver. Now, I had believed that silver would have gone past $30 to 50 already in January when gold took out 2,000. I think part of the reason it's been a bit of a laggard is to do with China because China had gone through in the last 12 months what is equivalent of the U.S. mortgage financial crisis, the same magnitude back in 2009. So that really put a damper on the appetite of silver investors and silver demand in China. And so that sort of affected the market. But since then, the equity market and the housing market in China and Hong Kong has rebounded somewhat. So that really, I think, was the factor that propelled silver to go past $30, in April, in May, a bit of a laggard to gold. So we can talk about where silver might go, but I do believe that silver is going to hover around this $30 level for maybe a little bit longer over the summer at the most, and then it's going to make a very strong push again towards the $50 level when it comes September, which is traditionally strong season for silver.
Yeah, we're definitely going to unpack a few of the things you said, and one of them being you just touched on the price because to follow up here, one would believe, seeing the news that solar panels, photovoltaics are chewing up the silver supply. Also, reports that there are about 2 years of above ground silver supply available. From where you sit, again, from where you sit and what you see with all this demand, how on earth is the silver price not well beyond 30, 35? And I think you did touch on a few of those things.
Right. And like I said, the street can stay irrational, right? And the fact that none of the silver mining companies are really making any money, and that the silver miners are, especially silver miners are, from producers to exploration company across the board, are still trading at a fraction of the peak that they reached back in 2021 when silver was about the same price. So that just tells you that the metal prices hasn't caught up to inflation. So fundamentally, from just the cost of production, that the silver price has got to go a lot higher. I might differ from some of your analysts in my view about silver demand. Um, my view is prices are always driven by investment demand and not industrial demand. And the reason for that is, as if when the prices go up, industrial demand seem to taper as they find substitutes, they find technological breakthrough the to curtail their usage. Whereas investment demand is the opposite. As prices go up, you double up, and we can talk about industrial demand for silver. I mean, Silver Institute has laid down a lot of excellent groundwork and analysis and back of the envelope calculation, but nobody really have the crystal ball of what's happening in the silver market. And I mean, Patrick, for example, you have mentioned about solar panels. I think if you to dig into silver panels a little more, the the amount of silver that goes into per unit of solar panel has gone down 70% in the last 5 years because of the technology and the lifeline of a solar panel has also increased. And then there's also, increasingly technologies available with recyclables. So all those factors I read a bit, but really not getting me much places. I mean, people talk about photo, the demise of photo prints, but that really didn't put a damper on silver price either. So therefore, I'm always focusing on the investment demand. And I mean, there's a lot of case and examples, right? If commodities are trading solely on their physical demand, then oil would have never gone down to negative back in 2021. So that's just a perfect example of how the tail can wag the dog. And that, particularly in silver, that's a key situation. I'm sure is well documented from your other guests. That 50,000 contract per day on the COMEX futures trading is the norm, not the anomaly, and that would be equivalent to 250 million ounces of nominal silver trading on a per day basis. So you look at an entire turnover of silver production annual basis in 5 trading days, and that being the case, and then there is naked shorts. There's also ETF that divert the physical purchases, and then there's this whole lot of things that are being thrown into the mix to manage the silver price to where we stand today. If I'll go out on a limb and say if the silver and gold prices are not being managed like that we are right now. It used to be on a Friday they would on a long weekend, as you know, Patrick, 10, 15 years ago, once a week or once a month on a long weekend they'll come and intervene. But now it seems to be that they will intervene 4 days a week and give it a breather on a Friday, such as these Junith day, right? Yesterday, and then you see a flip of silver. So there's almost kind of the opposite cycle. Um, in that, so I would say that you got to really follow the investment demand, and from that perspective, what we see is a dichotomy of the silver action. One day it's pulled down by the underperformance of copper and oil, and some days it's pulled up right? By the rebound of the gold, which is done better than silver in the last couple of years. And I think that's more of a central bank, the well-to-do place than by the silver than anything else. And because the silver market is too small for the billionaires, the Jeff Bezos and then the Elon Musk, so they had to go for gold. But I think what we're seeing right now is that demand in gold, physical demand in gold, being sort of propagated into silver going forward.
If you're enjoying this interview with John Lee and I, please consider subscribing to our YouTube channel. And did you know that at Silver Bullion, there are 6 different types of accounts to suit your needs? To find out more, go to www.silverbullion.com.sg, click on the signups tab, and choose from these 6 different types of accounts. Or email me, Patrick at silverbullion.com.sg, and I'll help to get you started. Okay, great points. Great points there. Appreciate it. Um, Something else in your sector, in the mining space, electric vehicles and nickel. Do you see more nickel going to electric vehicles as the industry grows and goes forward?
Patrick, I was very bullish of nickel, and I've been studying nickel for another 14 years. So silver and nickel are really two of my specialties. The issue with nickel, I mean, nickel in the last 4 years has quickly gone from nowhere to becoming the de facto standards for high performance EV batteries. So the what's happening and the vast underperform. I mean, nickel is the worst performing metal actually in the last 18 months, which has really caught us by surprise. I think the reason for that is twofold. Patrick, if you want to talk about a bit of fundamentals on nickel, first of all, is you have the Indonesia laterites and Philippine laterites, and that is a very dirty technology, and they were literally just throwing the dirt into the furnace and the burn in with high pressure and high temperature, 2,000 degree and 50 par pressure, and so that created a lot of supply into the market, and then what happened is it was maybe a bit over. The players are over infused with the EV market as with with the support of the government. And there are some drawbacks on the EV in terms of the range and the problem with operating in the winter time and the charging time. And then coupled, I think Patrick, the investment demand for nickel was almost entirely withdrawn back 2 years ago in 2022 when Elon Musk's quote that minus much silver will give you giant contract, and then that enlisted Volkswagen's Goldman Sachs to be long hundreds of millions of pounds of nickel. That drove the nickel price 5 times in a day. So right now the London Metals Exchange for nickel is completely crippled, and they raised the margin requirement. They laid out a lot of the things that a lot of up caps and just a lot of the handicaps to deter speculators. So without that futures market for speculators to step in, and the perpetual supply for of nickel coming from laterites from Indonesia, and then a bit of overrun in the sort of excitement of EVs, I think altogether it might continue to having the exert pressure in the nickel space. Primarily, I think that investor lost confidence of the nickel futures London Metals Exchange. The nickel went from $7 to $50 a pound in 2 days, and that precipitated a halt of the LME. And I came up on the show, Patrick. I think we should talk about that. Is it is also a distinct possibility that silver can follow similar suit, and that's why I've been recommending my audience, including my mother, to buy physicals, and it's the first time I've for the last since 2015 and then before that 2005 that we started getting to the physicals again, because when things start going out of hand, there's really no telling of when that will start and when that rally will end. Because, like I said, it's entirely speculator driven, and it will not take a whole lot of physical demand for silver if they choose to corner like the Hunt brothers back in 1980, because you only need about a couple $1 billion to make a run of silver for 100 million ounces. There's not a lot of. I don't think there's 100 million ounces of silver that's readily available. As I said, I think a lot of the underground silver has to be recycled. A lot of investment demand is actually be doubling up at higher silver prices, not lower silver prices. So I don't see above ground inventory as an issue, and that at current price level, given gold has taken out $2,000 level at a very modest 70 to 1 gold to silver ratio. Silver ought to be around $40 to $50 already today.
Yeah, I agree. I'm really waiting for that day, and I do remember that day. Nickel shot up, and the LME basically shut it down, and trading halted for I think a couple days. And when it opened back up, nickel was right back where it was.
It is it is unfathomable, unimaginable what the LME did. So for the silver bugs out there, and of which I recommend a quite reputable shop like Silver Bullion. I talked to Vincent quite a lot about your facilities in Singapore, and some of the great things that you guys are doing. One of the largest vaults in Asia is LME nickel in I think in March in 2022 started at 7 and went to 50 in like 2 trading days. So that would be equivalent of silver today went from 30 to over 200 in 48 hours. The LME halted the nickel trading for over a week. And then during that week, it forced all the trades to be settled at around $20. If you were to go to YouTube and you can actually watch some traders, a lot of traders in Russia because they are one of the larger nickel producer in Norilsk, and then the trader was so down because they were shorting nickel and nickel went to 50. All of a sudden, the newscaster told him that the news just came out while they're interviewing that nickel will be all the trades will be settled at 20. So, and that's also because the reason is one of the largest nickel shorts was a nickel tycoon in China. And he shorted hundreds of million pounds of nickel, tens of billions of dollars, because he is one of the largest laterite producer. So he was hedging his margin. But he doesn't have the nickel to deliver because the laterite nickel out of Indonesia is nickel pig iron. It never gets refined to the end product. And and then London Metals Exchange is owned by Hong Kong Stock Exchange, so they went behind the scenes and they conjure up the scheme to rescue the tycoon, and so don't be surprised if you are long silver contracts or long ETFs that if silver went from say today $30 to 200 in a week's time, and then you're counting your chicken your ETF and your futures got halted, and they're gonna redeem your silver at $70 instead of 200, and there's nothing you can do about it. There's multi-billion-dollar lawsuit that's still ongoing until today, and they can always blame on money laundering, Al Qaeda, you name it. If you're on the wrong side of the trade versus the power that be, it's going to be a uphill battle to win over, and that's why I continue to highly recommend purchase of silver physicals. And from that, I'm particularly recommending numismatics in Canadian maples and in American eagles. And the reason I say that is, lack of a better analogy, is square metals versus a Rolex, right? Obviously, it doesn't go that far, but when push comes to shove, the spread between the physical bullion bars versus American Eagles and maple leaves, when there's a lack of supply available, it's gonna drive to a spread that you've never thought or imagined possible. Easily double the silver price when all said and done on this on the markup of the numismatics. I digress.
Good stuff. Good stuff. One more metal, platinum. It's been quietly moving on up. Can you tell us about the supply and demand and maybe the usage of platinum, or just your overall view and take on platinum?
I also study platinum to heart, and the reason was when we were focusing on nickel, actually in early 2010, we were one of the largest junior company in nickel acquisitions. We acquired 6, 7 different nickel projects, primarily in Canada, but a lot of this nickel projects has PGM byproducts, so we also study PGM. I was very bullish 15 years ago on platinum because I was falling in love being a chartered financial analyst. I said, wow, historically for the last 200 years, and platinum has a up to 30 to 50% premium to gold, and gold was at 1300 at the time. Platinum was a parity. I said, well, if the ratio ever revert back to 30% premium, platinum would be 2000. I bought a lot of platinum coins also. I lost a lot of money. And I was very bearish of, and so platinum was. I was very bearish from 2018. Part of that is from the Volkswagen scandal that with the diesel, and then platinum goes into the diesel analytics, so catalytics. So I was very bearish on that, and we're not seeing conversion of gasoline powers catalytics to revert back from palladium to platinum because they invested a lot of money in palladium already, and that the auto sales will actually start trending down with the advent of EVs. So the problem you have is the growth of EVs and the demise of diesel cars, of which the platinum catalytics go into. And then if you look at the millennials and the Gen Zs, and they don't get married anymore, so the jewelry demand is coming down, and then the industrial demand is coming down. So really, platinum got stuck in this no man's land. That's why you see platinum went from 2000 to trading as low as 800. I thought platinum could go to 500, but given we entering into a reflationary environment with gold and precious metals embarking on a breakout in the bull market, so platinum is kind of become from my least favorite metal to becoming sort of, hey, it's coming out of that bottom fishing, right? And so platinum chart looks very, very bullish, and the 200-day and 50-day moving average both are at about 920, and platinum is trading at about 940. So if you're bullish on gold, I would just sprinkle a little bit in that into platinum, because gold right now is still trading well above its 200-day moving average. Gold is at 2340, and the 20 moving average for gold is around 2080. So there is a bit of a 10% cushion there. You got to be a little careful with we're entering the summer doldrum, and that the dollar, which we can talk about, is, I believe, embarking on another rally with interest rate hikes coming in the horizon, not cuts. So I think that's going to catch the market by surprise, and that's going to channel some of the demand away from precious metals into yield-seeking instruments. So if that was the case, gold might encounter continue a bit of consolidation. But whereas I think platinum going into the future, part of that's investment demand as always, but the other part is the substitute of nickel and lithium batteries with hydrogen cells. I thought that hydrogen cells would have probably come on about by around 2030s, but then given the accelerated path of development of technology, that nickel lithium batteries could have a competitor making a run at its money. And if that's the case, hydrogen cells require platinum's catalytics, and that could very slight bit of demand increase, right, could really lit a fire on platinum. I mean, the annual platinum supply is only about 5 million ounces. Majority of that come from South Africa and Russia. So you do have that potential supply disruption, and then coupled with just very tight supply and demand current equilibrium, a bit of uptick in demand in the EV space, given sort of, can really swing the needle and the propel platinum to a lot higher prices. So here is a buy.
Excuse me, I was looking at your Twitter feed, and you were just talking about these MDAs or moving day averages with some of these metals. So I do hope people take a look at John Lee's tweets out there, because he talks pretty in depth with these things, and good insight on it. Uh, but having said that, I'm going to put you on the spot one more time here. If John Lee had to choose just one metal, which we've talked about, platinum, nickel, gold, silver, what metal does John Lee place his wallet on?
Wow. Well, I'm a chartered financial analyst, so I have to preface by saying everybody's time horizon and risk tolerance is different, right? If you're punting with your daughter's school money that you need to pull out in 3 months, that's very different from discretionary money that for a 40-year person that counting on retirement in 20 years. So I think that plays a lot of factor into that. And then you got to look at the upside versus the downside. So, for example, like I said, I think platinum's upside may not be as good as gold and silver right now, but the downside is a lot more limited than gold and silver. And for example, silver's 200 moving average is around 25, and right now it's trading at 30, right? So you can always have that sudden correction when the cartel is coming to smash the market. And the question is, are you able to withstand that volatility? So my answer is, if you have you and today, the trading cost transaction cost is so low that you can spread your eggs at different baskets, and that's one way to go at it. And if there's one metal that I would put my money in, and I would let it sit for a year or two, say minimum of a year. I like silver the best right now. It is very undervalued, and I think as gold start to continue its run, I think it's going to go to potentially go to 2,800. And there's a lot of technical and fundamental indicators that points to that. I mean, we're talking about a 2 decade resistance level of $2,000 being taken out, right? And if you look at the bottom of the handle, there's 1,000, so easily can go the other side of the neckline of 2,000 would be 3,000. And then any conservative gold to silver ratio at 70 or 50 or even 40 is pointing to at its $3,000 gold is looking at 60 to $100 silver. And I think that's quite imminent. So if you're able to withstand volatilities and manage your margin carefully, or just on a 100% cash basis, you're looking at downside for your investment right now of around 10 to 20%, but you're looking at 2 year upside close to 100%. So that's probably my number one trade. Followed closely by platinum. I think gold is another steady force to be reckoned with. That's another safety trade for somebody who is a little more risk averse.
John, you had me at silver. Yeah, me too. Little bit different topic here. We are seeing a rift developing between East and West. Sadly, it looks like it will continue to grow. Do you envision more protectionism, maybe tariffs coming into play? And if so, how do you think this is going to affect the mining sector and the resource sectors?
It's going to get a lot worse. It's going to get a lot worse. We have several wars going on simultaneous. You have a real war in Ukraine, and that is a dogfight. It's a quagmire fight right now. Like they're giving up a meter. Like literally, they're going up a meter today, advance, and the next day they retreat 2 meters. So right now, it's almost the war is pedantic. It's almost, the war can only be settled right now. And I go on the show and saying that the war can only be settled by a change of regime of Russia and China. That is what's happening right now. It's not about territories anymore. And right now it's like, whether you're getting a kilometer more or a kilometer less squared, and that's the rate of which they're advancing right now. It's not really relevant. So right now they're just throwing bodies out there and billions of dollars on a daily basis, and then trading for that change of regime. It's almost like the movie 100 or 300. I don't know if you watched that movie. You have the Greek, right? That showed. Then you have the giant, Indian looking guy, the monster, and they say, you gotta bow, and if you don't bow, then we're gonna flatten your land. That's what's happening. It's kind of like the Opium War 200 years ago, and that's exactly what we have. And the West, it's not really the West; it's the guys behind the scenes that's controlling the West, because the West is not really Macron or the UK minister, or certainly it's not President Biden. So somebody is behind the scenes that pulling the strings. And these are the people, Patrick, unfortunately, that have been ruling the world for the last 200 years. They're the ones that financed Marxism, I mean Lenin. They're the ones that financed Mao Zedong of China. So now you just have a couple of rebels in Xi Jinping and Putin that don't listen to the guys that's behind Biden anymore. It's not about democracy versus. This is not about democracy versus communism. This is really about who is having the ultimate prize, wearing the hat of ultimate control. And the control is a slice of the Sino farm, a slice of the Yukos, a slice of all the critical industries and the population, media, rhetoric control to be synchronized around the world. So having said all that, uh, things are going to get a lot worse. Same with Xi Jinping and the East. There's not a war declared right now, but I mean Taiwan. There's like 60, 80 planes that are flying across the Taiwan Strait every day. And when I took a flight yesterday from Southeast Asia to Taiwan, you can't even cross. You can't fly through China across the Taiwan Strait anymore. You have to go beneath Vietnam and go up to the other side of Taiwan to enter into Taipei. I mean, Taiwan could be raided in an hour notice, and I don't know if people understand how fragile the situations are. And the question is this U.S. has the resolve to defend Taiwan, and can Taiwan issue a warning of any counterattack towards Shenzhen, Macau, Hong Kong, of which there are several giant-sized nuclear plants? So the question is, where are we going with this, right? Because once, once, once the fire is lit, there is no coming back. There's no coming back. So, and right now, it's a very precarious situation. What that translates to is continued higher metal prices, regardless of if any additional worsening geopolitics come to fruition. Because behind the scenes, gold and silver is always driven by monetary accumulation. So what I mean by that is Xi Jinping, soon as they get hold of their foreign reserve, is gonna go into gold and silver because Putin's $300 billion is poof off the smoke, right? And then Japan, think about it. If Taiwan gets attacked and the U.S. doesn't come to the plate to defend Japan, then Japan is sitting on what, half $1 trillion of foreign reserve, and if U.S. continue to meddle with the internal affairs of Saudi Arabia, of which U.S. is not even buying much oil from Saudi Arabia anymore, then Saudi Arabia may think twice about keep supporting the U.S. Treasury, and that's why I think the Treasury price is going to go a lot lower, and the Treasury yields are going to get a lot higher, and then the next 2 years, I think that right now the yield curve is inverted. It's a very costly mistakes for investors that are long dated treasury right now. I think they're in for a rude awakening. Used to be before that, the inverted yield curve always had resorted in the last 30 years to the Fed easing interest rate, right? While the long-term rates stay high. But now I think this time around, people is going to very quickly come to the epiphany that the short-term rates are here to stay at 5%. It's never going to go down to 3%, which is what the market anticipate, to have the long yield sitting at close to 4 to 5%. It's just not going to happen. And so that is something that's in the cards. The investors gotta pay attention to it. Geopolitics is not gonna do better. Miners has been in the doghouse. We can talk about that. I think there's a couple of reasons for that. We started very well. I mean, if you want to just go quickly, Patrick, I think first of all, as I mentioned to you, metal prices hasn't really caught up to inflation, and and that's why none of the mining companies is delivering dividend or cash flow, and the guys are barely scraping by. They are shortchanging, deferring explorations and development of the mine to reduce their cost. And secondly, I think also gold and silver are a reserve depleting business. They're match burning business. The first majestic silver that you bought, or the Newmont you bought 20 years ago, is not the first majestic silver and Newmont today. All that gold and silver that was 20 years ago is long gone. So they have to continue to acquire new mines and develop new mines. So it's a very tough business in that explorations of their reserves, depletion, and then coupled with that they're just not making money on the current metal prices. And then the reason they're not is a dualfold. I think, first of all, the metals are heavily managed and shorted. In addition, Patrick, I think some people have been talking about it recently, louder and with a more emphatic voice. But my belief, Patrick, is on a typical day, around 80% of the shares are algo driven, mining shares. And they are heavily managed just like the metals are. The cartel certainly don't want to have discouraged metals investors going into the mining space, right? Because then that create a bit of a question mark to other participants. General public say, why is Fortune shares trading at $100 when silver trading at 30 and they're not making money? So they cannot create. They have to manage that. They have to manage the whole storyline narrative on a holistic way, and from that way they have to short mining shares, and they're resorting to naked shorting the shares. It's well documented at this point. And also, there are days where, like for example, there are days where First Majestic exhibit a lot of weakness on a silver uptick, and then sure right, the next day silver got whacked. And I think it's not so much speculating, but it's not much hypothesizing, but it's really based on critical thinking and deductive reasoning to come to the only conclusion that the share prices are heavily shorted and managed. The inflation, the metal prices haven't caught up to inflation because of the management. And then one other thing is that we're kind of like back into 2000, where gold investors. Today's metals investors are not retail moms and pops. Okay, they're not. Rather, they're the extremely billionaires, centi-billionaires that want to circumvent the microcurrency, the micro mandates from the impending imminent digital currency, the central bank diversifications. And so the metals investor right now are not the same set of investors as mining investors, which is a very, very small subset, right? If you look silver, for example, the total mining companies combined in all the public stock exchanges is probably $20 billion. That's not enough for one Jeff Bezos. So like they're just not in a place to invest in junior mining company. Just not enough bandwidth. So you have to wait until a much higher gold and silver prices, around $2,800 gold, around $40 to $50 silver. So that's going to lit a fire on the mining. That's going to blow the lid off the management of the mining shares when they start delivering cash flow and dividends. And then that's then going to propagate into the junior sectors and exploration sectors within the mining industry. But right now, it's an uphill battle.
Thinking back to what you were saying, so I'm imagining your travel from Southeast Asia back to Taiwan. So the flight had to go a little bit more east, more towards Philippine side. Was that what happened?
Right. So if you look at this is China, this is Thailand, this is Hong Kong, this is Philippines, and this is Taiwan, right? Used to be you would just fly from Thailand across Cambodia and then towards into China, Hong Kong, and you go to Taiwan. That's the fastest way. So, but now what you have to do is got to go through Cambodia, Vietnam, you go to Philippine waters, and then go up Kaohsiung, and then go to eastern side of Taiwan to enter into the space. Completely avoid that Taiwan Strait. Very similarly, I can give you a plenty of examples since I fly around the world 3 times a year. If you were to fly from Vancouver to Seoul, Korea, used to be you will fly above Anchorage, almost towards the North Pole, and entering into the Russian space, and then go back, Vladivostok, and then go back down to Incheon, Korea. But now you cannot do that. You have to go to below Anchorage, and you got to fly the route of the as if you're going to Tokyo, and then so there are. So the point is, used to be you have a lot of liberty in choosing your path when you fly Pacific or Atlantic, but now there's only a certain path, one or two or maybe three that I think the parties have a handshake of ceasefire. But if you divert outside of that path, you are you can't really speak for anything else. The same when I used to fly from Frankfurt just last year from Frankfurt to Mongolia. You used to be able to get there in 8 hours. You simply go from Frankfurt to Ukraine. From Ukraine, you enter into Russia. Go fly past Moscow, and you fly up right to towards the north into Mongolia. But now you have to fly beneath Ukraine. You got to go through Turkey. Then you got to go to the Kazakhs and the Uzbeks and and then you wiggle your way, then get into Mongolia. The caveat and the the interesting thought, Patrick, while we're on the subject, is if the Sino-US war worsens, which is worsening right now, like the EV trades and tariffs, and then the trades are getting worse. People they're trading spats. They're not getting better. They're getting worse, and it's not getting a lot worse if the China follows the Russian suit in closing down their airspace. How then is somebody? How is the Japanese gonna? How are you gonna fly from Tokyo to London? Because from Tokyo to London, you used to fly through Russia and through Scandinavia, right? And you're landing into London. But now that China cannot fly. Like Japanese will have to go through East Pacific, through Philippines, through Vietnam, through India, and then head a way up. So your flight time is gonna go from probably around 7 hours to potentially doubling that. And talk about the sea routes as well, right? So I think there's a lot of ramifications that people are not really thinking about and contemplating. And all that is going to bode very well for gold and silver because as global commerce gets disrupted, and also as the utility of the dollar diminish from somebody arbitrarily got turned off their SWIFT system with the flip of a button, people are just going to start having second thoughts about alternatives. And the BRICS are not as comfortable as using the euro as was the dollar, and I don't think the BRICS is going to come with the currency maybe we'll talk about it. I've been on the show for 2 years now. I said Indians and Russians couldn't even agree on the time zone to hold their meetings, much less agree on a currency. And then what about the money supply? How much you can print versus your debt ratio, right? And where is that digital money going to be governed, and where is the printing going to come? I mean, all of that is just it's a nonsense. I think to be talking about a brick currency, it's just not in the cards, and I don't see it happening. So we do a lot of commerce all around the world. I don't think that Indians would never feel comfortable uh, uh, having Brazil to have a say on how much Indian can print to finance their social welfare programs. It's just never going to be in the cards. Euro is still a different story because they were coming from all the same origin. But to having the Brazil talk to the Indians and then with the Russians and the Saudis, it just you know it's a basket full of characters. I think BRICS currency is a long, long way to go, which means that every country will have to continue to accept the dollar, the renminbi as a matter of convenience, but they're not going to hoard too much of it. Soon as they have too much of it, they're going to resort back to gold uh, uh, in some capacity.
Outstanding, outstanding. John, I was going to ask you a bunch of these questions about the bricks and other things, but you sailed right through it better than I could have even asked questions. So I appreciate you just running with it. Great info there. But before we head out, can you tell us how we can follow you and about Silver Elephant or other mines and projects that you're working on?
Yeah, I'm a passionate, prolific writer. I used to author well over 200, 300 articles since 2005, but I stopped doing that since I started running Silver Elephant 14 years ago. Started as a hobby that turned into a double full-time job for the last 15 years. So I know more about mining than I ever want to know in talking, in community relations, in feasibility studies, in exploration, in drill holes. And it's more than I need to know. But my passion is always be economics and world travels and economies. You can follow me on Twitter. Just search John Lee Silver Elephant. We got about 3,000 followers, and I do marry the technical and geopolitical analysis with the fundamental trends. And then you can also follow us on silverelephant.com. The mine is in production. We're producing about 1.5 million ounces of silver gross. It's at a fixed margin of seven up to 7 million US dollars. But we're going to increase onto our phase 2 of our production schedule next year, of which those silvers were not hedged. And 100 million ounces of silver in the ground. We're trading at about 20 million market cap. We're double from our bottom, but we're still a long way from the top. So I think for those investors that are more risk averse, certainly welcome you to take a look at it, and feel free to contact myself if you have further questions. Patrick, I also want to allude to something else that's very, very important. Um, when I come on other shows, they were sponsors of silver bullion shops that I've never heard of, and they offer a membership pricing of 149.99, an annual subscription, and thereafter you can buy all the silver coins and bullions that you want as spot. I was a little bit courteous in not sort of blow the cover, but you got to watch out when you started wiring money to bullion shops and or having any kind of subscription membership basis. When I mean, we could enter into a scenario where there's a run, much like Perth Mint. I don't even remember, about 10 years ago. I think their passbook, right, blow up, and then they said it's allocated storage, but they were selling allocated storage at spot, or like 0.1% spot, which is just not possible because the cost of bullion is more than spot plus a premium. And then they had a run. And I think eventually, I'm not sure. I think eventually the Perth Mint, which is quasi government owned, merged with some other entities. So I want to highly caution your investors accumulating silver physicals, for your well being, getting away from the micro mandates. That's the only way, right? And then in case of a run on the COMEX and getting arbitrarily halted and expropriated of your silver, that you want to make sure that you have a couple of trusted sources. And I feel quite comfortable enough in talking to Vincent and about your Singaporean facilities to say, I think Silver Bullion is one of those shops. I would feel comfortable in placing orders as I did with JMMN, and with Kitco. But the last time I ordered with JM, it took 6 weeks for the coins to arrive. So I haven't done any more business with them, and I don't know them. I don't get endorsement sponsor from you or anybody else. But I would just say keep your order small, and try, make sure you have 2 or 3 shops, and you want to really ask a few questions about their holdings, and especially you're going to place big orders on their existing inventories, and if you're able to have some inventory reports if possible. They can have your serial number scraped, right? So which I think just being able to talk to a live person will makes a lot of difference, because guys operate in the shadow, they're not going to entertain a retail person in talking just to, right? So I think just you got to have that, you got to really have that due diligence before placing big orders. I think something you got to really watch out for, because they are a lot of mushrooming of silver dealers out there spamming ads. Just want to be really, really careful, Patrick. That's just a word of caution.
Yeah, no, it's good advice. I appreciate you letting the viewers know that. Even for myself, as I scroll through Facebook, I see countless ads for gold and silver popping up, guys I've never even heard of, and yes, you do need to do a little bit of work. I appreciate your input, John. I mean, I'm glad I finally had a chance to speak with you. I think you gave some good insight that nobody else that has given us about the just even the flight paths and how that can translate into the geopolitical, the geoeconomics of it all. So I appreciate that.
And you know what, Patrick? That's one other thing about smuggling, right? So a lot of like, for example, I want to share a quick example, because something you don't hear about and give you some food of thought is all the weapons that Russia, all the Russian weapons, all the weapons used by Russia at Ukraine, once dissected in Ukraine, they found majority, if not all of them, has American-made electronics. So that just means that a lot of the sanctions are only at infancy, and there's going to be further enforcement that's going to lead to further segregation and division of the world. You have a lot of the metals that are smuggling through, like vanadium as an example, that are exported to China from Russia through barter trades, and then from there, China will buy electronics, and then through other offshore entities, and then from the United States through intermediaries, and then from there smuggled into Russia as a barter trade for their nickel, for their PGMs, and then for the vanadiums, and then from there Russia is then manufacturing. So there's a lot of examples out there. For example, if I don't know if you know Huawei, the phone manufacturers in China, they're now the largest importer of cattle beef in China, because they they cannot settle currencies they cannot settle currencies for to sell their phones in Argentina, and receiving dollars. So now they're resorting to receiving whatever, right? The South American countries can throw their hats on. So things are going to get a lot worse, and we're going back to the Aristotle ages of what is money, what is a currency, right? Is it divisible? Is it tangible? Is it fungible? And I think over time, people are gradually going to realize that, hey, we have something that's worked before and work again, and that is gold. And all those factors, I really think that is making this time is different. People say, "Oh, John, every time gold went to 2000, got whacked." I think this time is different, because this is a big titanic paradox shift. It's a change of landscape. And I think that's that proof of this pudding. Hopefully I'll be back by the end of the year when silver is 50, when gold is 26, 2800, to show that, look, this time is indeed different. And my projection for gold is 6,000, for silver as well, into the triple digit mark, probably before 2030. So I'm sure, Patrick, we have a lot to talk about in the months and years to come. But first is that $50 level for silver, and then $2,800 for gold. And I think we'll have a good chance of going at it before the end of the year.
Yeah, I agree. I'm looking forward to having another chat with you a little bit down the road. I'm not going to wait too long. I'm going to get back with you within a short time. But again, I appreciate the insight. We're going to have to buy you a mic one day, because a lot of things you're saying, it's absolutely drop mic stuff.
My pleasure, Patrick.
That was John Lee sharing his views on precious metals and the economy. To see more of John's views and work, please go to www.silverelephant.com. If you like this video, please do subscribe, give it a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.